please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, as we wind down the financial year 18, Nigel is here to take us through the key events and how exactly the markets have fared in FY18. Nigel, over to you.
Well, what a year it has been, FY18. Well, if you're taking a look at the mother market, then the Dow did have a good run. Actually, the Dow was a relative outperformer even from the developed markets. So both the Dow as well as the Japanese index, they did quite well in there, while the other couple of markets, they didn't do that well. But we look at the emerging markets and we're looking at them very, very closely. So the Brazilian index did very well. That was up more than 30%. But FIs, they're looking at it in dollar terms. And in those terms, in fact, it was up only around 23%, telling you there was some weakness in the local currency there. The Chinese market, though, that was a relative underperformer. It was down nearly 2%. But we did see some strength coming in on the Chinese yuan. And that's why, in fact, in dollar terms, that market ended in the green. But our Indian markets, we had a whole host of factors to really contend with all through this year. The rollout of GST, that's what we saw at the first half of the fiscal. Long-term capital gains was introduced in budget 2018. We also had a couple of other factors, global factors, Fed rate hike. Couple of rate hikes that came about, as well as the Nirav Modi, PSU scam or saga that played out towards the end of the year. But Trump's tariff tantrum, really, that was the one that really spoiled the party, particularly in the last couple of months. There were a lot of challenges that were up against us, and that explains why towards the end of the year, after having 3 good quarters, the last quarter wasn't that good. In fact, that was the one that has given us a cut of around 350 points. But how have the other fiscal years gone? Well, this year we put on roughly around 11% approximately, but we have had better years in there. And in the last 5 years, well, we had only 1 year, one financial year, when we did see some losses. Well, how did the indices do? Well, you had the Realty Index that's in there with big gains. You had the Metal Index as well, did well. But the IT, that's a surprise outperformer, sitting with a gain of around 17%. And the small cap and the mid cap space as well did do quite well. Well, what didn't do so well? PSU banking stocks, they didn't do well. So that index is a relative underperformer. And the Pharma Index didn't feel too well in the last fiscal year or so. Then the big losers, out of the top 5 Nifty losers, well, 3 of them are from the pharma space. So not looking too good. Lupin's in there with a cut of more than 45% and a couple of other pharma names as well. But in terms of winners, well, we had plenty. You had Bajaj Finance, that's in there with a gain of more than 50%. And HUL, everyone says it's expensive. Well, even in the last year, it's given you returns of more than 45% as well. But moving on to some big winners that trade in the F&O markets. Jubilant Food, that's doubled your money. NIFTY as well as doubled your money. And Titan, from the next fiscal, it's going to be part of the Nifty. That as well has done quite well. But there are plenty of winners. So let's run through that list quickly. Ashok Leyland has given you nearly around 70%. KPIT as well in there with a return of more than 70%. So there has been green on the screen, but when there are big gainers, obviously, there are some losers as well. Reliance Naval has down more than 50%. HDI has lost more than 50% of its market capitalization. And MCX as well has lost another 40% just in the last fiscal or so. But remember, we'll end on a positive note then, because there are plenty of stocks that gave you big returns. Not about double, triple. Some of them have even given you 10 baggers just in the last 1 year or so. HEG has given you a 10 bagger. You have Goa Carbon that's done very well. Graphite as well. So a lot of these steel ancillary stocks did very well. And that's really where the money was made. But just to wrap this up, well, in this year, we're up closer around 11%. Given the challenges that we had, well, we have done quite well. Back to you.
Okay, all right, Nigel. Thanks very much for that. Well, focusing on Hindustan Aeronautics, that stock will be in focus because it's listing on the exchanges today. Sonal is here to give us a heads up on what we can expect and the subscription figures. Sonal.
Good morning, Ekta. Well, we are expecting a tepid listing because the IPO has been subscribed only 99%. QIB portion was subscribed around 1.73 times, but the other categories that were subscribed less than 50%. So we can expect a tepid listing. If I talk about the company, it's a 100% government-held Navratna company and is involved in design development of aircraft, helicopters, and aerospace structures. In terms of the issue details, the issue size varies from 4,113 crore rupees to 4,198 crores, and the government will be divesting 10.2% of the stake. In terms of financial performance, well, the growth has been in terms of single digit. The revenues grew by a CAGR of 4% over FY13 to 17. EBITDA and PAT grew by 8% and 5% respectively, and almost 40% of the sales come from one of the aircraft, and exports are about 2.5% of the total sales. Now, what the company expects is that they expect going forward they'll be able to do an EBITDA of around 20%, and they have a current order book of around 68,000 crore rupees right now. And going forward, they see two large visible orders, and they have received requests for proposal of these two orders. Now, talking about the valuations, well, if we value it in terms of FY17 earnings, the valuations look reasonable at 17 times FY17 earnings. But in terms of first half of FY18, the valuations are quite expensive if we annualize the earnings, and it comes up to 52 times of FY18 EPS. But the brokerages, they are quite positive on it. LKP says that IPO can be subscribed for some listing gains and for long term as well. PL says at the upper end of the price band, the issue is valued at 16 times, and that's why we can subscribe it with a long term view. But we'll have to see how the stock actually lists today.
Okay, all right. So now thanks so much for joining and filling us in on that front. But as FY18 comes to an end, Kevin Lee caught up with L&T CFO, Mr. Shankar Raman, and began by asking him his outlook for FY19 and also the roadmap for the company. Let's listen in.
We are optimistic. I think it's a bit too early to say we are very bullish. We're coming off a period of reasonably modest growth over the last couple of years. FY19 is going to be a tricky year in the sense that it's a year where preparatory work for elections will start. A lot of our work has got to do with infrastructure, which means that a lot of fund allocation is required. As you know, it's been public sector and government which has been largely driving the investment in the economy for the past couple of years. It's not likely to be any different in the current year. So there's going to be a demand for the limited resources that the government has at its disposal. So it has a lot of opportunities in medium to long term. Talking about FY19, it's going to be a mixture between what is politically prudent and what is economically viable. So developmental investments is going to share shelf space with social sector spending.
You mentioned that the focus of the government will shift more towards developmental schemes, hand in hand with infrastructure, of course, but talking maybe not about the direction of the spending, but in terms of quantum of orders that come in from the public sector. Do you expect that to be more or less on par with FY18, or do you think that that could be lower as well because, like you said, we're going up to elections?
See, I think FY19 is more like a 9-month year. The last 2-3 months will get slower because there will be a run-up to the quiet period before the elections in the summer of 19. So consequently, whatever that happens during the first 6 or 9 months is going to set the pace for how the year is going to end. So normally, we find that the second half of the year is more productive because the government is more inclined to issue orders, award contracts in the second half of the year. That should not be the pattern in this current year is my estimation. It should get fast forwarded. It will be beneficial to the industry because capacity utilization could improve, and the government could get into the election on a little more positive note than what the last couple of years have to show. So I think I'm not very sure about whether the volume growth in orders over FY18 would be dramatically higher, but I think the important projects, the marquee projects which are worth mentioning in terms of government achievements would get ordered out.
Talking about some of the big projects, you mentioned the Trans-Harbour Link project that was awarded to you. What is the status on that? Has work started yet? You are doing 2 parcels out of 3, if I understand correctly. What is the update on that?
Yeah, I think work has commenced. It's a complicated project from an engineering point of view. A lot of engineering work will precede the actual construction work. So I think the work has started at right earnest, and we hope to be able to deliver that project according to the plan
One thing that I've asked you multiple times before, I think during your results press conferences, is that when can we expect to see an L&T InvIT? Because we've seen 2 InvITs that were launched last year. They were the first 2 InvITs that we saw in the Indian markets. After that, companies seem to have taken a step back. I think they're in a wait and watch mode. Do you think we'll see an L&T InvIT in FY19? What is the current status of that?
We're working towards it. We've spoken about this earlier, that we have a portfolio of road assets, which in my opinion are inevitable. We need to make sure that the platform that we create in form of InvIT is a sustainable, stable platform.
I think we've got some news coming in on Persistent. So let's hop across. Rima joins in to run us through that piece of news. Hi, Rima. Good morning.
Hi, Nigel. Good morning. The company has come out with a pre-Q4 quarterly update where they say their intellectual property business, which is about a quarter of the company's revenues, will see a revenue decline of $8 million on a quarter-on-quarter basis. Now, $8 million is roughly 6.5% of the company's previous quarter's revenue. So that is the extent of impact. And it's a non-linear business, which means the revenue decline flows through to the company's margins as well as profitability. While Q4 is seasonally weak for the IP business, but Credit Suisse says that this time it is weaker than what we normally see. But the management says that notwithstanding the weakness in Q4, the outlook for FY19 remains strong, and they believe that they will cross in FY19 NASSCOM's guidance of 7 to 9%. Morgan Stanley says that while there will be an EPS impact of 6%, you cannot rule out a short-term PED rating for the stock. So definitely weak for Persistent in trade today.
All right. Okay. All right. Thanks so much, Rima, for joining in and giving us those details. But let's hop across to Manisha Gupta. She's going to tell us what's going on in the commodity markets. Manisha?
Thank you so much for that, Nigel. Well, it is the dollar index which has rebounded from a 5-week lows that has pulled the commodity prices slightly lower. So the crude oil prices, which hit $71 in the U.S. session, have seen a bit of a retreatment. Having said that, we still are nearly 6% up for this month, and the crude prices are headed for a third quarterly gain, which is the first time since 2010. API data shows that there is a buildup in crude inventories by 5.3 million barrels. Markets were anticipating a decline in inventories. So that is what really seems to have worked against it. But if you look at the hedge funds, they are bullish on the crude oil prices outlook. So this perhaps is a profit-taking that you are seeing before the weekends, before the month ends, etc. But we are looking bullish on charts when it comes to crude. A quick one on the metal prices, and we have seen prices rise as trade fears have eased, but the strengthening US dollar has limited gains here as well.
Okay, all right, Manisha, thanks so much for joining in and giving us those details. But today is expiry day, so let's hop across to Mangalam. He's going to tell us how are things shaping up there. Hey, Mangalam, good morning.
Good morning, Nigel. So this is the last expiry of FY18. The Nifty is down about 200 points this series so far, after losing close to around 700 points in the previous series. But the good point is, yesterday, rollovers picked up. So the Nifty rollovers so far have been 54%. This compares with a 3-month average of 44%. So a large part of the rollovers are already done. So could be a little less volatile on account of expiry. However, if the range is looked at, the traders are perhaps playing for the 10,200 mark as the fulcrum, because both the call and the puts at the 10,000 mark, 10,200 mark rather, were very active. So together, the premium on the 10,200 call and put is close to around 65 rupees, indicating a range of 10,135 to 10,265. For a broader range, 10,150 call is 10,250 call and 10,150 put are very active with a premium of 30 rupees as well.
Okay, all right, Mangalam, thanks so much for that. Well, on that note, we'll wrap up on Power Breakfast. You stay with us. Bazaar Morning Call comes up next.